Hello again, everyone. This is Joe Hentges with Beyond the Chart, and in this technical analysis of the stock market video, we're going to take a look at the market action here, looking at the SPY, the S&P 500, the New York Composite, and then check in on one of my key indicators, the VIX, that we look at, and three key ETFs, and see what the dollar's up to. So stay tuned. All right, we're going to start off here with the S&P, the SPX, S&P 500, and it was up 9.86 on Friday. It looks like we've got a little bit of consolidation going on, although starting on Wednesday, we kind of broke a little bit higher. The market was deeply oversold as of the 12th. Okay, I'm not oversold, it was deeply overbought as of the 12th. And what I think we've done is basically worked off that overbought condition as we've kind of moved sideways to up here on the SPX, and it's a little clearer when you look at it on the New York Composite. Back here's the 12th on the New York Composite. We really have just pushed sideways, and of course the New York Composite is a much broader measure of the stock market, something like 2,600 stocks in the index versus the 500 in the S&P 500. So what we've done, we've worked off the overbought condition. We're back down into the neutral zone, and this looks like I am looking for another leg up. We've had 1, 2, 3, and a sideways push. I'm expecting a third leg up, or the fifth wave. Now, because this second up move did not wave 3, I call it 1, 2, 3. Wave 3 did not extend, and they look fairly equal, not quite, but they're close. I'm expecting this next wave to extend, okay? And when I look at the SPY is going to be the same. Really, it's mirroring the S&P 500, which is exactly what you expect. That's why, by and large, what I really go off of is the S&P 500, because, I mean, this is what the SPY is trading off of. So the wave count is the same. I've got it between the two. When we look at it on a weekly basis, and I look at the wave count, a normal wave 3 would project all the way up here to above 2450. Now, one thing I've done is I've looked at this and created channel lines in here. Let me rescale that so you can see this. So I think we're working a fifth intermediate wave up. 1, 2, strong 3. This is now confirmed, as 4, because we've moved to a new all-time high up in here. So we are in the fifth intermediate wave. So you draw a parallel line, draw a line between 2 and 4, and project it out from the top of 3. Now, it doesn't, when you do that, it doesn't fit the tops back here very well. And if you project another one out here, you get a little bit of a zone that you could target out into the future. But what I'm going off primarily is the one that projects off the top of 3. And really what I've done with this line here, this line is just a normal expectation of a Fibonacci projection of wave 1, okay? And so this is a normal length, what I would expect for 3. Does it have to go that far? No. Let me show you. Here's why I say it doesn't have to go that far. In Elliott wave, you've got wave 1, wave 2, wave 3, wave 4, and wave 5, okay? Well, a lot of times we're expecting wave 3 to extend, but the main rule with Elliott wave, the rule that can't be broken, is that 3 can never be the shortest. So you could have a wave 1, get a pullback, have a wave 2 that didn't go nearly as far as you thought it would, and then you get a little bit of a choppy sideways push in here, and then another one that's even shorter, okay? And as long as the third wave, this third impulse wave here is not the shortest wave, you're fine. So that's why what we're doing as we watch in here, we have to watch the wave count and see just exactly what it's doing and what it's developing as it pushes higher. But the other reason why, let me go back. Let me see if I can get back to my mouse. There we go. Let me go back to the S&P here. No, that's the SPY. But either way, S&P 500. When we looked at this wave 1, here's wave 1, and here's this wave 2. Wave 1 has 5 waves up. Because it's got 5 waves up, this looks like an impulsive move, okay, versus any kind of triangular ending diagonal whatever. You would have like, you know, a series of threes. But because we have a 5 wave here, that's why I'm expecting another 5 wave here. And so I'm looking for this next leg up. All right, so that's the picture on the market I've got right now. It's projecting a lot higher, you know, and but nothing goes up in a straight line, as we all know. Let's take a look at the VIX. You know, we're very, very low. Down here at 12.02 on Friday's close. We're really, really low. But, you know, it's going to take some work to get above this 10-day exponential moving average, get it turning up. And the other thing that I point out to my insider members is that just because it's down low doesn't mean that the market automatically has to come off of that, because, you know, it can sit down here and trade down here, you know, for several weeks, just like back in here. And can it go a little bit lower? Yeah. I mean, look how down this got, down below 11, down to 10 something, and chopped around back in 2014. So anyway, that's the picture. Are we at the opposite end of the spectrum from up here with the peak fear and stuff? Oh yeah, absolutely. But now we just have to watch and wait for the turn. And of course, a lot of that is just watching the wave count. When we look at some of the key ETFs, the S&P, the SMH semiconductors really broke out this week. This is all of the trading this week, and you can see it gapped up on Monday, and it gapped up above this high. This was the all-time high on SMH. So this is confirming. I've got 3 of these indicators I like to look at to kind of look to see who's in sync with the market. Are all of them in sync? Are none of them in sync? So now all of a sudden we got the semiconductors that seem to be in sync with at least the S&P 500 and the Dow. When we look at the home builders, not so much. They're not doing a whole lot. They've pushed a little bit above the April high, but they're not even close to the other highs. And when you look at the financials, they're struggling with this line. I talked about this last week, how it pushed just a little bit above, and here's all the trading of the last week right in here. So we're just stuck right at this downward trending line that's contained all of this corrective activity so far. So, you know, this week, if we get another leg up in the market, do we push above this? Well, we'll see. All right, so that's what we're looking at. The last thing we're going to look at today is the dollar. And the dollar looks bullish to me. I think we had a very big corrective low right here at the beginning of May. This looks like 5 waves up and then 3 waves back. So I'm counting this as wave 1 and 2, and that we're working a wave 3 up. And boy, did we get a strong start to that wave 3, which is what you expect in a wave 3. This started to look like a bullish flag, but then almost morphed into a little bitty cup and handle type thing and broke above this trend line, pulled back, and then Friday had another bullish resumption to the upside. So still looking for this to keep moving, and it looks like the dollar wants to continue to push higher. All right, that's it for today. And if you like the video, hit the like button and share the video. Remember to share that. All you got to do is just copy the URL link and just paste it. You know, send it to somebody, put it in an email, put it on your website, whatever. So that'd be great. And if you're not a subscriber, hit the subscribe button and subscribe. And just got a brief short message for you here at the end of this video. All right, everyone, have a great weekend. Hey everyone, I want to give you a brief introduction to my Insider Members membership. So this is a little bit of a peek inside. So we're going to take a quick walk around. This is the dashboard page where Insider members log in, and this is where you see the calendar for the week. I make any adjustments if there's any tweaks depending on what's going on with the market. I have announcements. This is also where you manage your credit card and your membership subscription. So you can see this menu is different from the public menu. This menu is only available and only seen by the Insider members, okay? So what we've got is the dashboard where you land when you come in. Trade ideas is the page where I list all the trade ideas and have the detail there, etc. That's updated every night, and we talk about it every night on the video. Now the trade ideas video is what comes out on Sunday afternoon, where I review the existing trade ideas and talk about any new trade ideas that I've got for the coming week. Stocks for options trading is just a list of stocks that I think are attractive for options trading based on liquidity and liquidity of the options and liquidity of the stock. MWM is the weekday market wrap. This is what I produce Monday through Thursday. And let me just give a little peek as to the slides. Pull this up. You can, to the page anyway. So this is where I post the videos, and the members have the ability to look at the videos, and they can range anywhere from 10 to 15 minutes, sometimes a little bit longer. And I put them out there, and they get posted between 6 and 7 p.m. Central Time every night. The WMA is the weekend market analysis. That's what comes out on Saturday, and I produce that, and typically this is 25 to 35 minutes long, and I almost always provide this little index to the video. So if members want to look at something specific, some particular part of the video, it kind of helps guide them along, but hopefully they look at everything. So that's the picture here on the videos. Ask Joe is a repository of currently 32 videos that are out there based on questions I've received from members over the months, and it continues to build. So right now, that's a great little library and a great little resource. Member resources is another place where I've got things, documents I put out there for members. Terms is just simply the terms and conditions, and we've got some of the legal things that we've got here: privacy policy, the risk disclaimer, products. This is where you've got the ability to buy the course or my ebook, and of course members get 40% off on the course. So that's a little bit of a peek inside the membership, the insider membership, and I hope you found that helpful. And if you did, step on over to the membership page. And here on the main page, different menu is where I've got the membership page, and you can look at this as kind of a quick summary, some quotes from members, and some of the things, again, just a review of everything, and I go into a little bit more detail, kind of what I just talked about, all for just $1.57 a day to have access to all of this information. And you have the ability to use your credit cards and subscribe. It's all very secure. Powered by Stripe. Stripe's a very powerful credit card processing firm that handles things all around the globe. It was profiled in Fortune last year or so, but they've done very, very well. So anyway, I thought I'd pass that on. We've got a little Q&A down below here too for questions that you've got. So hope you found that helpful. We'll see you on the inside.